Q&A. Um, get get on the mic there and interrupt if I say something that you need some more information on, or maybe, I work for the government, so an acronym or two might fall in there, and you're not sure what that means. Do interrupt me and make me explain what it is, and that way we all get what we need out of this. So we got slides we'll cover, but if you walk away today with a question unanswered, that's on you. Slides don't matter. I want to make sure your questions get answered. So uh, with that, we'll go ahead and get started. Hopefully you're looking at an SBA on your screen right now and you see our logo on there. We'll flip through and get to our staff here just real quick so you know who you're working with when you're working with the SBA. You see Tyler Teresa there. He is our regional administrator, covers 8 states here in the Southeast. And Melissa Lindler, she is our district director here in South Carolina. So she oversees all things that go on here in the state. And then you see the staff there for South Carolina, myself, Angela Brewer, Frank Anderson, and Stephanie Bittaker. I didn't catch my list of names on my participants pretty short here. So if any of my team is on here, speak up now. Let us know you're here so we can let everybody hear from you. Anybody there? All right. Yeah, we're all pretty busy, as you can imagine. There's only 5 of us cover the entire state, so we're all doing our own thing, and certainly appreciate everything everybody on the team is doing to support myself and the businesses out there. So, all right. So you came to learn about numbers today, is what I understand. Financials 101. So it looks like we got a little over 50 people on the call today, and congratulations. Most people, when we start talking about numbers, run in the other direction because this is a topic that we all know we need. We all want to understand more about, but when it comes time to sit down, as I say, we're going to talk about numbers, most people are like, yeah, I'd rather not. So, congratulations, you made it here. And I promise you, we're not going to speak accountant today. We're going to speak small business. I've had 4 businesses of my own. And I remember back when business number one started, I could not stand the numbers either. And the scenario I had there was my numbers always got done, my accounting, my bookkeeping, it always got done last. And that made it even worse, right? Because you're trying to stay awake, you're trying to get the numbers in there and try and make it all make sense. And I will say over the years, the more I got in the swing of things and got accustomed with the numbers and figured out what they all meant and how to read them and all that good stuff, the more I liked them. So um, you'll see that we're going to talk about some of the more popular or most popular financial documents that you should be reviewing on a regular basis today. But I'm not here to make you an accountant. I'm not here to make you a bookkeeper. I'm just here to point out some of the things that you need to know as a small business owner to make some wiser decisions on your business, how you operate it, some of the future planning that you might have in play. And then, if you need to do a deeper dive, you can contact me afterwards, and I'll be happy to do a deeper dive on some of these things. I would encourage you to have a bookkeeper and or an accountant at some point where you can tap them and get some additional information as well. But we'll go ahead and start in on this. So just real quick, if you haven't dealt with the SBA up to this point, Small Business Administration is here to help businesses start, grow, expand, and recover, as you see there. So if you're in startup mode, we have a lot of no-cost resources available to you. I don't say free because most people will say free means it's not worth much, but I will say this. Most of the individuals who work in our resource provider capacities, they are fellow entrepreneurs. They've been there, done that, like myself. I've wrestled with payroll. I've gotten angry with the regulations. I've struggled with the taxes and all those good things that come with being a business owner. So do reach out to the people we're going to be talking about today. These are folks who know what they're talking about, and they truly do take pride in helping other small businesses be a success. So some of these you've heard of. Obviously, SCORE. You're sitting in their webinar right now. They're available for mentoring and helping you navigate the processes of being in business. There's several offices across the United States. We have really strong SCORE presence here in South Carolina. We have offices that are doing a really good job. So reach out for them. And then small business development centers, or SBDCs. That's that, as was said just a few minutes ago. I spent over 15 years with them. Ran the Greenville office before moving up to SBA, and they're more detail oriented. They get in the weeds with you. They'll sit down and do market analysis to help you with business planning, like SCORE does. Some of these SBDCs are also connected with centers of education, so Clemson University, USC, Winthrop's, SC State. They'll have access to resources on campus as well. So they might be able to help you in that manner by bringing maybe a graduate student or two, or maybe a team of students onto a challenge that you're facing or an opportunity that you have, and help you through that. Women's business centers are there. They're kind of like an SBDC, but specifically focused on women's business. They can handle any client that walks through the door, but they do focus on women's business operations. And then veteran business outreach centers, or VBOCs. These are, again, like SBDCs, but they're focused on veterans and their veteran businesses out there, because there are some unique programs to veterans that they would be well versed in helping you with. So if you're a veteran like me, I was in Air Force 85 to 89. You can reach out to them and see if there's anything veteran centric that might help you in your journey as an entrepreneur. And then you see Apex on there. Apex is our arm under the SBA umbrella that helps with government contracting and procurement. So if in the future, or maybe right now, you are thinking that part of your marketing makeup or your revenue streams will be selling to the government, whether that's local, state, or federal, Apex can help you connect those dots. And that can be a very complex process, but once you got it going, it can be a lucrative one. So if that's something you're looking for, reach out. We can get you connected with Apex. They have an office in Columbia, but they work virtually throughout the state. And I've had opportunity to have them actually in a couple of my classes here recently, talking about what they do to some of our attendees. So reach out to them if government contracting is on your radar. All right, so enough of the infomercial. Let's go ahead and get started with the numbers now. And again, if you have questions along the way, do interrupt, let me know, and we'll get those answered as we go. So first thing I wanted to talk about is, why is this important to you, business owner? We've got, I think we've got about 45 minutes here to talk about all things numbers, but why is this important? So I think anybody who has been in business for a period of time, or watched a small business maybe in your small town, they realize that it can be a daunting task, but at the end of the day, it's all about, is it profitable? So keeping the numbers is extremely important. And as you can see on this slide here, making things profitable, making sure that you are able to turn what you do into cash at the end of the day is the primary purpose for that business to exist. But you also look at a small business, or if you're in small business for yourself right now, you also understand that you probably got into this for something more than just the money. Most entrepreneurs are in this to improve their community. They're in this for a better lifestyle. They're in this to improve not only their family, but the families around them's atmosphere. So, yes, we're going to talk about money. Yes, it's going to sound like we're all about profit and nothing else today, but I do especially encourage you to find those things that recharge the batteries, make this worthwhile for you to come in. It's not always about money. It's more about the meaning that you make in people's lives around you. If you want to know something more about that, look up on YouTube. There's a video out there by Guy Kawasaki, and he talks about making meaning in order to make money. And it's a pretty short video, but it hammers home the fact that it's not always about the cash. All right, so accounting, I've said, it's important. So why? You got to keep good financial records for a lot of reasons. You got to file taxes. You got to make decisions. So you have to have good, solid financial records. You got to be able to determine whether or not what you've decided to do with your life and this entrepreneurial journey is exactly what you're accomplishing. You have to be able to know the numbers in order to make wise decisions so that you can make better profits, make better revenue choices and revenue generation choices, and so on. Um, it also allows you to determine whether or not you are doing things as you should. So, in other words, um, can you benchmark your business against not only yourself, and we'll talk about that in a moment, or can you also benchmark yourself against like businesses in your area? And I'll talk about how you can get information to do that here in a moment. But benchmarking your business so you can tell if what you think you're doing is a good job, is actually a good job or not. And then I like that next to last bullet on there. It says, are you making money or are you moving money? It's one thing to start the year with $100,000 and end the year with $100,000. That's just moving money around. But are you making money? If you start the year with $100,000 and you end up with $150,000, now you're making money. So if we're not keeping score with the financials, then we may not realize that we're really not getting the return on this investment of time and energy that we had hoped for. And then pricing and cost decisions, anything really that involves the movement of money through our business, we have to have good accounting in order to be able to manage that properly. So when I say accounting, what am I talking about? Well, typically when we say accounting, that means we're tracking the numbers within the business, and those usually fall into the categories of sales, expenses, profits, cash flows, you know, those things that we tend to use to keep score on whether or not we're having a really good month or quarter or year or not. But it also entails an inventory, so to speak, of what we own in the business, those assets that we have, the things that we owe others, those liabilities that we might have. And then between those two and some of the other numbers that we're talking about, we should be able to come up with, generally speaking, what this business is actually worth. Because at some point, you want to extract the value out of the business. You may find, as in many cases with small business owners, they don't really get the return on the investment of their time, their energy, their money that they put into a business until they exit the business. So if you're not building value and increasing the worth of the business over the years, it may not give you the return that you had hoped for. So keeping track of the numbers will definitely help you on that path. So let's talk a little bit about some of the things that you may hear in discussion when we talk about numbers and accounting and the like. Um, Certainly, as I've already said, if you're making daily decisions on your operations, if you're seeking funding, if you have a pandemic like we've recently had, you know, you're going to have to lean on some form of financial data in order to accomplish some of these things. Daily operations. Do I move forward and take part in that next marketing campaign that I have an opportunity to take part in? It has a cost. Well, how can I determine if that cost is going to give me the proper return on investment? What type of return do I have to get out of it in order to make it worthwhile? Maybe there's some decision making, some common things like, well, can I bring on a new truck? Am I going to lease that truck? Am I going to buy that truck? So decision making becomes a little bit easier when you have good numbers in front of you. And certainly, if you're going to move forward and ask for funding, all of your lenders are going to want to know, well, how's the business performing? And you are going to have to produce good, solid financials. So those are all really good reasons to do the financial tracking. Also understand that when you're talking numbers with folks, accounting and bookkeeping are not the same thing. Accounting would be the heavier lifting type thing. So in my example I just used, should I lease the truck or buy the truck? Well, there might be some tax advantages. There may be some depreciation opportunities there that you can take advantage of. Then an accountant would be able to guide you on. That's the accounting side of things. The bookkeeping would just simply be tracking the actual numbers. It would be tracking the lease payment or the loan payment on that said truck. It would be recording any kind of depreciation on the books that was involved with said truck. So the bookkeeping is just kind of keeping track of the numbers. The accounting is getting deeper into the decision-making aspect of the numbers. We're going to talk about towards the end of today's slides the differences in some of the ways that you can make this easier with software. QuickBooks and several other options exist, so we'll talk about those in a little bit. And then you may also come across the dreaded question of, well, are you cash or accrual accounting? If you're not into numbers, this one's going to probably go right over your head, and that's okay. Your accountant will most likely take care of the decision as to what you're going to do there. However, just so you know what we're talking about, if you're using cash method, which most all of our small businesses do, that means the money doesn't get recorded in the books unless the money is in your pocket or being spent. It happens at the time that the transaction actually hits the books. Accrual accounting is when you allocate the funds based on what is coming down the pipeline. So if you're going to sell an item or make a purchase, you may go ahead and make that purchase now, but it'll hit the books, but you haven't actually paid for it, say, but over the next 6 months. Or a sale that you may make, you may put it on the books, but you're not going to fully receive all funds for 3 months. That's accrual accounting. It's not quite as friendly to be able to say, well, how much cash do I have right now? That's why most small businesses, they use that cash method over accrual, but your accountants will look at your numbers and determine whether or not it might be advantageous for you to look at things from an accrual standpoint. Sometimes from a tax situation, you're better off to look at things from an accrual standpoint, but don't let that trip you up. That's why you have that accountant that you can talk to and clarify that. So the last thing that you see there on that box there, knowing the numbers, as it says there, allows you to run the business rather than just being in business. So many people are in reaction mode when they're in business, and they're in reaction mode because they don't track numbers, they don't make projections, they don't make plans in association with those numbers. Therefore, they can only react to what happens. If you're tracking the numbers and you're projecting the numbers and you're making decisions based on good solid data, then you are running the business. You're no longer in that that full reaction mode. Yeah, you're still going to have some hiccups, but um, you will find that you can actually start to plan out what's going to happen in the business rather than sitting back waiting to see what's going to happen in the business. All right. So that's just kind of the groundwork. Let's talk about the documents that are associated with financial statements. Have any questions in the Q&A or anything right now?
Right now, Earl, just question actually I was getting ready to answer. Just want to know if the slide deck is going to be available after the session.
Absolutely. Yep. We'll make sure that everybody gets a copy that is on the webinar. All right. Financial statements. So these are the documents that you're going to have to produce in many of these transactions that I've just kind of rattled off as examples. Hopefully you're familiar with what some of these are, but again, if you're not, that's no problem. People get intimidated when we start throwing around terms like income statements and balance sheets and profit and loss and things like that because they just don't know what they are, and that's okay. Don't get intimidated about that. If you haven't gone through business school, if you haven't chosen a path of bookkeeping or accounting, then you've never been exposed to this. How could you know about this? So don't let it intimidate you. That's why our resource provider network that I just went through, that's why we are here to help you through this process. So we're going to talk about each of these statements here today, and I'm just going to point out some of the things that you should know as a business owner to help you assess what you're looking at there. And also keep in mind that while we're only going to go over income statement, balance sheet, cash flow, and break even, there are many other ways that you can look at your numbers. There's several other reports that you can run. You see some examples there in parentheses, the AR, accounts receivable, aging, inventory turns, those types of things. Depending upon your type of business, depending upon the question that you're trying to answer, depending upon the situation that you're trying to analyze, you may want to bring in some of those other reports. But the ones we're going to go over today, these are the ones that you want to look at on a regular basis so that you can make good decisions on a daily basis and keep a pulse on how the business is operating. All right, so this is our first one, and your documents, your financial statements are most likely going to look different than these, but the general parts that we're going to discuss, you should be able to find those in your financial statements as well. So first thing I want to point out is, this is the balance sheet, and the balance sheet is typically printed out, and it's really only good for that time in which you printed it. So um, if you print this off at noon on Monday, it's out of date at noon 01 on Monday. Because as soon as you bring in more cash or spend cash, as soon as revenues occur, maybe you make a payment on a loan, the balance sheet's now no longer up to date. So the balance sheet is good at getting a snapshot of where your business is. It's also the very first document that most lenders will ask to see in the event that you walk into a bank and you ask for a loan. And the reason for that, they can do some pretty quick analysis. I'll talk about this in a moment, where they can take a look at this and determine how lender ready your business is. And so this is a document that you'll need to know about specifically if you're going to be going forward for funding, but also you want to take a peek in on maybe do some analysis like a banker would to determine how healthy your business is. So with all of our reports, all of our statements, we want to make sure that we're looking at the date of which they were run. We want to make sure we're looking at like periods of time. So if we're looking at this first quarter of this year, we want to compare it to last first quarter of last year. Just make sure that those dates match up so that your comparing apples to apples, because that's the best way to look at numbers is one year or one quarter or 1 month compared to the same period last year. So look at our date first. We then, on a balance sheet, we see that we have assets at the top and we have liabilities at the bottom. And as the name would imply, the assets and the liabilities have to balance. They have to be the same. You see that we have the same number on this slide here for both assets and liabilities. A balance sheet has an order to it. It has an order in that it shows current assets and non-current assets. Current assets are things that we can turn into cash within 12 months. So cash is already cash. It's at the top of the list. Here, you see cash is the first thing on the list because that's the thing we can convert to cash the quickest. Accounts receivable, those people who owe us money is the second one on the list, and so on. So as we go down the list, the things that we can convert to cash the quickest are at the top. The ones that might take a little bit longer or farther down on the list. So these are all of our current assets. Now, assets are those things that we own in the business. They're ours. That's what that gives us a little bit firm value in the business. Non-current assets, you might have already guessed, those are things that we can turn into cash, hopefully, but it's probably going to turn after a 12-month period. So it's going to take longer than a year to convert those assets into cash. And you see here things like fixed assets. Now that'd be like buildings and vehicles and things like that. And then we have depreciation in here. That's a subject that we'll put on hold for a future discussion if you want to get into depreciation. But depreciation is your friend. If you have assets in your business, you'll want to definitely make sure that you're getting credit for the depreciation on those assets. And I'll leave that to you and your accountant to have that discussion. But you'll find that on your balance sheet. And then once we add up our current and non-current assets, will come to our total asset amount. So this cash amount should match up to the bank accounts that you have in the bank or in the business. So if you have savings and checking account, the total of the cash that's in those two should add up to the cash value that you see on the balance sheet as of the date that it's written. So if you get your monthly bank statement and it closes out at midnight on the last day of the month and you run your balance sheet on the last day of the month at the same time, the totals of your bank accounts should match that cash amount right there. If they don't, you have what we call leakage. That means you've got cash that didn't get accounted for somewhere and we need to track that down. So that's your total assets. Then towards the bottom, we get into liabilities. So these are the things that you owe people. And just like assets, we have current liabilities, we have long-term or non-current liabilities. Those things that we will pay within 12 months, those things that will take longer than 12 months to pay. So between these two, the assets and the liabilities, we see things that we would normally work with daily in our business. So these are not difficult for us to understand on the most part, but as you go through a day and you do transactions in your business, those are the areas that you're going to see the most change in. We get towards the bottom of the balance sheet and we get into this section down here, capital and net worth or net worth. What these are typically long-standing numbers that track the ongoing success or not so successful aspects of the business. So owner investment. So everybody has probably put some money into their own business. And this should track to what money you're putting into the business. You always want to know how much you've put in because at the very least, that's what you want to get back out. And then retained earnings, that's kind of a mystery number right there to most folks. When they see that, they look here and say, oh, there's 75,000 in retained earnings. How do I get that? Where's that money? The fact of the matter is that's kind of an ongoing scorecard of your profits and losses over the course of the years that you've been in business. So year one, if you make $500, you don't want to have to carry that into year two and pay taxes on that again. So we set that aside basically and put it in retained earnings. You earned $500 in profits in year one. Year two, you had a better year and you earned $1,000 in profits. So now your retained earnings at the end of year two would say $1,500. Year three, maybe you had a bad year. It was, an off year, and you lose $300 that year. Now your retained earnings is $1,200, and so on. And it just continues to keep track of your profits and loss year over year. And you can see how well you're doing there just at a glance with regards to profitability. So between the liabilities and your capital slash net worth, you should be able to balance out between assets and liabilities. And you see over here we have some equations that you can use to make sure that you're in balance, and also check the worth of the business and so on. As you get more familiar with the balance sheet, you can really just kind of glance at it and be able to see what you need to see. You probably aren't going to be doing a ton of calculating on this one. But when we talk about ratios, this will be the source of a lot of numbers that you'll use, again, just to see how healthy is the business right now. All right, so that's the balance sheet. Let's talk about the income statement. This is the one you'll probably spend more time on. Most business owners, they get the balance sheet because it's a little bit more difficult to understand. They will file that one, and they'll spend all their time on the P&L. That's okay, but do please look at the balance sheet from time to time. The P&L, I call this the grade card of the business. This one allows you to track the trends within the business. Are we paying more rent than we had over the past couple of years? Are we increasing our revenues? If so, where are we increasing our revenues? Which of the revenue categories are the most profitable revenue categories? What is it that is causing our profits to go down? What expenses are pulling from our profitability and so on. Now, all of that is available on this document. That's why I call it the grade card of the business. So how do we read this? Again, first thing we check, what date period are we looking at? And P&L is extremely useful when we print it out to be 1 year versus the other. So you see we have one large column here for 1 year, we have another large column here for another year, and we're comparing one to the other. This will give you the most valuable look. You certainly can look at it just for 1 year, but it's not nearly as valuable as it would be if you had two. And you can actually do, in some of the software packages, you can do multiple years, but usually just a couple years is enough to give you an idea of where you're headed. So again, we look at the time frame, and we make sure that we've got our comparisons here, and we start to look at what's in front of us. So this starts out with our sales at the top, and then progresses to expenses towards the bottom, and then our profitability as our bottom line. So up here we have our revenues, and again, your statements will look different than mine, but you should have sales at the top, and you may have multiple sales categories, or you may just simply have one line that says sales. If you have one line that says sales, I would recommend that you might step back for a moment, think about how the money comes into your business, maybe break down sales into multiple revenue streams. Now, you don't need a dozen, but you need enough to where you can make some wiser decisions on the business. Do I want to continue this particular service? Is that particular category of product something that is not as profitable as I had thought? If you don't break it out and you dump it all into just one sales line, you can't make those more finite decisions. So you see here on this example, we have store sales and catalog sales. So at the end of the year, I can only answer the question as a business owner, I can only answer the question, well, are my stores more profitable or are my catalogs more profitable? I can't answer a question as to, um, we'll just say that I'm selling clothing. I can't answer the question as to whether men's clothing or women's clothing was more profitable or not. Should I continue with one or the other, and so on. So think about, I tell folks when they're setting up their financials, think about the questions you need to answer at the end of the year or throughout the year, um, and then set up your financials so that you have that data readily available in front of you. You don't have to do any additional calculating, because if you do, as a business owner, I know if you have to do anything more with this than what you see in front of you when it prints, you're probably not going to do it. You don't have time, whatever. So set them up so you can take a glance, you can see what you need to see to make those decisions. So you see in this case, we have $880,000 in sales. We have cost of goods. Now, some of you may not have cost of goods. Some of you, like a lot of my businesses, were consulting business. I didn't have any cost of goods to speak of. So you may not have a whole lot here, but some of you may have several, as this one does. We total up those things that cost us to actually produce the sale are in this section. We take that away from sales, and that's what leaves us with our gross profit. If you want to really work on the profitability of your business, you must know what your gross profit margin is, because this is where you can make the biggest impact on the bottom line profit down here. The net profit is by adjusting how high you can get that gross profit. So if you're not calculating gross profit, you're putting yourself at a disadvantage. So again, that's the total revenues, the total sales that we have, less anything it cost us to make those sales. That's what's left is gross profit. From the gross profit, now we take away what we call our operating expenses. These are the things that occur whether we make one sale, 100 sales, or no sales. That's typically what we're talking about in operating expenses. The items that go up and down based on sales are typically thrown up here in the cost of goods section. So down here, we take away all those things that cost us no matter what: rent, utilities, insurance. Sometimes some of the labor's down here. Sometimes labor is up in cost of goods. Depends on your business model. But all said and done, we have a total amount of expenses. Those get taken away from gross profit. That leaves us with what we call our operating margin, or our operating income or loss. And then from there, we take away the money that we all like to talk about, things like taxes, and we take that out of the picture, and then that we're left with our bottom line. So again, we're keeping things very simple for this particular class. There's certainly some strategies that you can apply here. There's some things that, maybe if you've been around business for some time, you might be thinking, oh, I don't think I'd put that there. I'd put it up here. Yeah, well, that's okay. Again, that's why we have accountants to help us make sure that we're tracking things that are in the best way for our business. So what I want to point out to you on the profit and loss statement, as I said, it's a grade card. You want to make sure that you're keeping track of your profit levels for sure, but you also want to keep track of how they look over time as it's trending, right? The other thing I will point out is the percentages. So when you look at a financial statement and you're looking at a percentage, a lot of times it's like, well, you'll get that question. Well, what were your profits last year? And somebody will say, well, it's 4%. 4% of what? What's that mean? Well, any financial document, if you want to know what the percentage is related to, find the line that has the 100% on it. As you see, it's right here, net sales, 100%. So 4% net profit 4%. That's 4% of sales, 880,000. That's what that means. So $32,000 is 4% of 880. That's what our profits were for the year. Now, 9 times out of 10, it's always going to be sales that everything's related to. But if you want to be absolutely sure, just double check whatever number has the 100% next to it. That's what all these percentages are a percentage of. All right. So that is your profit and loss statement. And you may also hear it called P&L, operating statement, earnings statement. Any of those names might apply to that. Now that document tells us where the balance sheet told us that one snapshot in time, the P&L will tell us where we are today and how we got there. The balance sheet only tells me where we are. Now we're going to talk about one that can show you a little bit more where we are today, how we got there, and we can use it to say where we're going. And that's the cash flow document.
Earl,
You've heard it.
If we
Go
can,
ahead.
before getting into the cash flow,
Sure.
we have a question regarding the retained earnings. Would the retained earnings be a negative number if the business has lost money and the owner increases their investment?
Yes, it very well could be a negative number, and that's if the business has run at a negative profitability, for any period of time, it could go negative, definitely.
All right. Thank you,
Good
sir.
question. Mhm. So you've heard it a number of times, cash is king, because if you run out of cash, the game's over, right? Turn out the lights and go home. So tracking said cash is extremely important. That's why I pointed out on the balance sheet, double check your cash balances against what your financials say that you have, because if they're two different numbers, you're missing out on either collecting or recording some cash, or possibly spending cash and not recording it as well. So keeping track of that cash is extremely important. Unfortunately, a lot of your online programs don't, in my opinion, give you the detail that you need to really do a good job of tracking cash. So I've always resorted to a secondary spreadsheet that allowed me to see cash and project cash, because I felt better with that. It was easier. It's one sheet right in front of me. I could make all my decisions based off of that. But you can find your best route. Before we can talk to the actual numbers, though, we need to understand what are the things that impact cash. So we receive and we pay invoices. We have capital investments that we may put into the business. We're buying a new truck or something like that. How we pay our bills will determine what our cash flow looks like. If we pay as soon as the bill arrives, or if we wait to pay right towards the end, that can impact how much cash we have at any given time. Inventory sitting on the shelf definitely impacts cash. Inventory is not a box on a shelf. Inventory is cash sitting on a shelf that you can't get. So you need to be turning that inventory to get to your cash. Debt. If you're carrying any debt in the business, that money costs money. So that can impact your cash flow. And then certainly how well we generate a profit and or loss in our business, that will impact how much cash we can inject into the business for all the rest of the things we just talked about. So understanding those things that impact cash will help you when you start to track it and make decisions with it. So this spreadsheet that you're looking at, and I don't want you to get intimidated by it, but this spreadsheet that you have here is this is available on the SCORE website. You can download it, and it will help you track cash. It basically works like a budget. So if you've ever done a household budget, you're familiar with the process of cash flow tracking. So when we look at a cash flow statement from a financials standpoint, you can print out a cash flow statement, and it's just simply going to tell you how much cash did you have at the beginning of the period, what's all the money that you spent out of that, and what money was left over, what cash was left over at the end of that period of time. And that's about all it's going to tell you. Yeah, you can run some detail and see it line by line, but you're not going to get anything like what you see on the slide right now. So your financials, say in QuickBooks or Xero or whatever you're using, they're not going to be nearly as detailed as what you see here. This document, in my opinion, is a better way to do it because you get to see month by month what actually you spend, what actually you bring in, and then you can project that and make some very scientific decisions on what the future of the business is going to look like within reason. Nobody can tell me what's going to happen 5 minutes from now, but within 6 months of today, you should be able to tell me about what you're going to have available in your checking account for the business. And you'll be within a few bucks of that when 6 months rolls around. So that's the goal here. This puts you in charge of the business. This allows you to direct the direction of the business. It's if you can't tell, I'm excited about this document. This is what makes it all come together for you. So how does it work? Again, much you're going to see some similarities to our P&L here. We have sales at the top, how much money's coming into the business. We have a total of said sales, and then we take out all of the things we spend money on, which leaves us with a subtotal. And then we take away all of those things like what the owner gets paid and if we're putting anything in reserve or anything like that. And then that tells us how much cash is available at the end of the month. This number down here at the end of the month then goes to the top of the next month, and we do the same exercise again and again and again. If that number at the end of the month does not match the end of the month bank statement, you are not tracking your cash properly. So, and it should be within $1. It should be within $1 every single month. If you're not, that means you didn't track something that you spent or made, and you now have what I said earlier, leakage. Once you've got some months in here, now you can project out and say, well, I pay the same in rent every month. I pay the same in utilities every month, and so on. I know I'm going to have X amount of dollars coming in from these clients over the next 6 months, and so on. You can project out what your next 6 months are going to look like. And now you have a tool that allows you to make decisions on the business today, and you can see how it impacts the business into the future. Extremely valuable. You're also going to need to be able to show this in the event of getting a loan. So a bank wants to see for the next 36 months, what is this business going to look like if you get the money? So you put it in here, and of course you show the loan payments getting paid back and all those good things. But um, you're going to have to prove that it's actually going to improve the business and allow you to pay that loan back. And that's what cash flow will do for you there. Now, if you're a startup business, this is also your planning document. Is this worth my while, right? I sit down, I'm going to start a business, I put some money into it. How long do I have to live on that money? Can I turn this business such that it's making revenues fast enough to where I don't have to put any more money into it, and so on. So when you're using this, if you're a startup business, you should be able to show this business is going cash flow positive within 18 months. What that means is you're finally at a stage where the business no longer is burning through cash, but is now making money. It's now making cash. That should occur somewhere within that 18-month period of startup for most businesses.
Earl,
I see we have a hand up.
yes, Elfrida, what would you like to ask Earl? And you're gonna have to unmute though, but you should be able to talk.
Uh, my
There you are.
apologies. Um, I didn't
Go
mean
ahead.
to raise my hand. You're doing great.
Uh-oh. No
Okay.
problem. No
All
problem
right.
at all.
All right. Well,
All
Grace
right.
has a question in the Q&A. Earl
Okay.
wants to know, are the categories aligned with the Schedule C and E tax categories?
You certainly could do that if you wanted to. What I find is most businesses are a little bit more complex. They have a lot more line items than what you'll find on the schedules for tax reporting purposes. So, you know, again, go back to what is truly important to you to be able to make the decisions daily, monthly, quarterly on your business and go in that direction. Yeah, it makes it easier to do taxes at the end of the year, but I would much rather have the data put in front of me that makes it easier for me to make decisions on the business.
Thank you so much, sir.
Yep. All right. Well, we're going to blow through a few more slides here, and then we'll just open it up for any questions that are left. But cash flow management, as I said, like I say, it's extremely important that you do this. It's the most empowering aspect of bookkeeping, if you ask me. And if you need assistance with this, our SCORE representatives and our SBDC representatives, VBOX, women's businesses, they're all well versed in this, and they all can help coach you through this and setting that spreadsheet up that you just saw. So reach out, get that done. If you want to improve your odds of success dramatically, that is the one thing I would tell you to focus on. Break-even analysis, I'm not going to spend a ton of time on this, but if you want to make wiser decisions on things like pricing and cost control, understand what break-even means for your business. You can calculate it many different ways. How many widgets do I need to sell in order to break even? How many hours of my time do I need to sell to break even? What price do I need to sell at in order to break even by X date or X number of sales and so on? Those types of questions can be answered more readily if you know what your break even is. So it is what it sounds like. At what point have I covered all of my expenses and I am now making profit? So Black Friday is the Friday after Thanksgiving. They call it that because supposedly for the longest time, the retail model was such that the retailer operated in the red all the way up to that day. And then they finally broke even and now they're going to make profit for the rest of the year. That's a scary model if you ask me, because you only got 30 days to make profit in a year. So you if you look at your business in a similar fashion, where do I start making profit? Then you can start making decisions on how do I make profit faster. Okay. And knowing what your fixed and variable costs are, how your sales impact those variable costs, that's extremely valuable in order to set proper pricing and make sound decisions on how you go about your daily operations. So if you haven't done that exercise, highly recommend you do it. If you need assistance, again, SCORE, SBDC, myself, we all can help you make those types of calculations. And this is just kind of a visual representation of what I was just saying. If you know how variable and fixed costs impact your business model, you can work with any variation of those. You just have to know what you're working with. Whether if you're a company that has high variable or high fixed costs, if you understand that, and you only understand that if you're tracking the numbers, you can make better decisions about how you sell your products and your services and the pricing that you sell them for. All right, so you got all these numbers in front of you. You've got these financial documents. How do you actually use them? Well, certainly you want to measure, is your business healthy? How do we do that? We've got some tools that you can use to do that: benchmarking, ratios, setting goals internally within your business, doing the forecasting that I was talking about. These are all tools that you'll use to apply these numbers in a way that are most useful for you. You will probably fall into some of these categories of the most popular key performance indicators as KPIs. That's what that stands for. How many sales do I have in volume as well as dollars? what's my profitability, how much cash do I have on hand. Those are all really good ones, but think more detailed with your business. Maybe there's some other things that you want to target to track, number of employees or deliveries. Those types of things might also be good KPIs for your particular business. Run some ratios on your business. This is where, when we were talking about the balance sheet, I said a lender could take a look at your balance sheet and pretty quickly determine whether or not your business is lender ready. Funding is always a thing for small businesses. You want to make sure your business is healthy enough to do these types of exercises. So we have several different ratios. You see a list of them here that can be run against a business to determine, how weak, how healthy are we. And this is just an example of how we would do that. And if you are looking to run these kinds of ratios against your business, you can Google just about any of them, or you can reach out to me. I have spreadsheets laid out just like this that tell you where to find the number on which financial document. They tell you what that result should be. You see, this is a 0.7. This tells us that it should be 1 or higher. So if you want to get into that kind of detail, look me up. I'll be happy to send you that spreadsheet, and then you can reach out with questions on that. All right, benchmarking. I said earlier that some of our resource partners are work with our colleges in the area. They also have access to large databases of industry data. So an IBIS report is an example of one. They can print out an IBIS report, let's just say for a transportation company, and that IBIS report will say a transportation company shouldn't be paying more than X% uh, on labor. They should have X percentage of their costs are probably associated with insurance. Their revenue growth expectations year to year are at 8%. This is industry-wide data that has been collected, and now you can use that to benchmark your business to see, am I close to that? Am I night and day different than that? And it gives you an idea of how well you may be doing. So not only do you want to compare your performance against your performance of a like period of history, but you also want to compare your performance against like businesses in your industry, because you may be trucking along thinking 8% net profit is great. And we pull an IBIS report on your business and find out that everybody else in the world's doing 25%. Well, now 8% doesn't sound so good anymore, right? So if you don't have that kind of insight, reach out to our resource partners. We can get this kind of data and we can help you benchmark your business.
Earl, right there, we have two questions. I'm going to combine them because they're pretty similar. Dealing with real issues for small business is the lack of capital. So for new business concepts, loans require cash flow. So can you speak to new company funding options?
Yeah, I mean that we have a class called Funding 101, and we go through some of the ins and outs of that. But I'm very well aware that when you walk into a bank as a startup, the bank's going to look at you and say, "Well, if you get 2 years, we're just not interested in doing the loan." But that's why the SBA exists, right? We exist to guarantee small business loans. That removes some of the risk from the bank, from the lender, and makes it more appealing to them to possibly do the loan. So in a case like that, obviously we can't guarantee a loan. We can't force a bank to make a loan. But what we can do is we can sit down with you as a small business owner and do the exercises much like you just saw. We can benchmark the data to make sure that it's not something pie in the sky and the bank's going to say, oh, that's just crazy talk right there. We can also do the projections so that they make sense, and we can show that the loan can be supported. We can just basically strengthen that business plan. And then we can look to the right type of lender. Not all lenders are equal as far as what they're looking for. Some lenders are looking for larger deals, some are looking for smaller, some like a particular type of industry, some don't. So that's when you want to work with an SBDC or SCORE. They know the lenders in your backyard. They know who is working with borrowers and who isn't, and then they can help you prepare the right package so that when you sit down, you've got your best foot forward. Again, it's not bulletproof, but it's so much better than someone who just walks in and fills out an application and hopes for the best.
Awesome. And one of our attendees works for CDIF that offers funding to startups. So Kendra, if you want to drop your, contact information in either the chat or the Q&A, I'll make sure that it gets over to the answered portion so everyone can see that. Because as being a startup once myself and sometimes still feel like it, that can be um, an issue unless you are funding everything yourself.
Right. Yeah, CDFI is Community Development Financial Institutions, great sources for funding, and for the coaching aspect of this. They in many cases will do a lot of the same things that an SBDC or SCORE chapter would do. So definitely reach out to them.
And Earl, have someone that is starting a venue for special events for a farm. Do you have any contact for them that they would be able to reach out to maybe see about funding or resources availability for something like that?
Specifically for farming?
For a venue for special events for a farm.
Oh,
Um,
I see. Okay.
yeah, yeah, and just need some
Um,
contact information if such exist.
Yeah, you can reach out to me after the fact. My information's coming up on the last slide here in just a moment. But you can possibly work with USDA. They have specific funding for rural type businesses, which it sounds like this might be. And whether it's actual farming or it's a venue on a farm, so that doesn't really matter. Um, but reach out to me after the fact, and I might be able to help you connect the dots on that. Definitely.
Okay, thanks. And since you have QuickBooks up there, what are the best ways to learn QuickBooks? Because I do know, and that isn't a question. I do know I've some of my outside clients. Um, QuickBooks
Hmm.
can be intimidating for some.
QuickBooks is intimidating. It can't be. It is intimidating. As easy as it makes accounting, it is intimidating. So I understand that. There's a lot of secondary online schooling that is available out there. YouTube's a great resource, believe it or not. QuickBooks actually has a couple of programs on their website that you can take. We do classes on a very low level on QuickBooks from time to time, but our SBDCs do anyway. But like many things in life, the best way to learn it is get in there and do it. Um, get the basics. Um, they have a actual test bed type of a company set up on the Intuit website. I can't remember what the URL is off the top of my head, but if you Google it, you could probably find it. It's where you can go in and just play with a test bed company. So you can go in there and play with it, try some transactions out so that you're not playing with your real numbers, right? And see how to do things in a safe atmosphere, so to speak. So that's how I would recommend you do it.
I also know that I'm believing they used to actually have a course on Coursera.
Hmm.
Several different courses depending on what you were looking at learning within
Hmm.
QuickBooks. And for everyone in attendance, Kendra Darity has listed, put her information in there. It is now under the answered portion of the Q&A with class climbfund.org. So be sure to look at that.
Yep.
And as well, of course, on the last slide when we get to it, Earl will have his information that you all can reach out to him as well.
Yep. And I just wanted to point out, there are multiple ways to make this easier on you. There's QuickBooks is the big fish in the pond, obviously. There's an online, primarily all online now. I put desktop with an asterisk there because they're not really doing desktop any longer. If you're still running QuickBooks desktop, you probably need to update the software because they're not supporting that any longer. And then there's some that are semi-free there, than that freemium type of an area. That's a Xero, Zoho, Wave. Those are all out there. You can get a fairly inexpensive online version of accounting tracking software there. You can use Excel, the spreadsheet that we use for cash flow here in class. That's available on the SCORE website, and you can do okay with that. You're just not going to be able to produce the financials that we had there um, as easily as you can on some of um, these software packages. Business credit typically comes up in this class. That can be a class all in its own. Just understand that how you track your numbers can impact your business credit. So make sure that you're doing that wisely, because if you want to develop business credit, and you do, you want to make sure that you're handling your liabilities properly and reporting things properly so that you can build up that business credit. We talked about the advisors and who's available there. And then there's a list of books that you can Google the titles there when you get the slide deck, and that will give you some background on some of the other ways that you can apply the stuff that we talked about today. They're not all boring counting numbers and accountant speak. The E-Myth is a very good story-based book. So yeah, I like to read, but I like to read things that are not boring. So that list is probably pretty decent. All right, so with that, I'll close out. Understand that we do have additional programs available. If you get the slide deck, you can click or hunt up any of these items. If you have a business and you're struggling with any federal regulations right now, you can go to the Red Tape Hotline, report those regulations that are causing you some heartburn, and we can see if we can address those with you. These are links to all of the resources I mentioned early on in our slide deck today, so check those out. If you're a self-paced, learn online type of a person, we have some links over here as well to help you with that. SCORE has an excellent library of online tools. Highly recommend those. And then if you need to reach out to us, I'm in the office in Spartanburg. We have an office in Columbia. If you go to Columbia, just be forewarned, that is a controlled atmosphere. So there is you have to empty your pockets and do all that stuff to get in the building down there. I'm on the road a lot, so call me ahead of time if you're trying to track me down, and I'll be happy to answer questions. I will tell you, I do answer my phone and I do return emails. It may take me a day, but rest assured, you will get an answer if you reach out to me. So just be prepared for that, I guess. With that, I know we're over time, but I will stick around and I'll take questions if there are any. And I appreciate everybody's attendance today. Thank you.
Thank you so very much, Earl. This has been enjoyable. And I remember when you start off, talking about those that don't really care for numbers. I work with several people who do not like numbers at all, but I always encourage small business owners, regardless of the part that you like about business or you don't like about business, you need to be well informed of all aspects of your business. So you don't have those missing dollar amounts when you look at your balance sheet and trying to figure some things out. Want to thank everybody for being in attendance, and also the Q&A is still open, so you have those answered questions that we typed in. And again, Earl's going to make the slide deck available for today, and I'll get with Bina Thomas, our system administrator when it comes to all things webinar. and she'll make sure that all attendees have access to that as well as the recording. Again, thank you all so very much. And Earl is going to be hanging around with myself for a few moments. If you all do have any questions, please feel free to unmute and ask or type in the Q&A. We'll be on just for a few more minutes.
What was our high number attendance for the day?
High number was 73.
Gotcha. Thank you.
You're very welcome.
That's really good. 81 registered, 73 attended.
That I know. Definitely beat expectation.
Yeah.
And Joe says great information, thank you. And Susan says great information and job. So
thank you. Thank you. Thank you.
Thank you all.
Good afternoon. My name is Ms. Sanchez with AV Construction Group. How are you doing, guys?
We're doing well.
Hi, Ms. Sanchez.
First of all, thank you for the presentation. It was great, amazing information. Only one quick question. Earlier, you were saying there is a way that we can benchmark, and that's something that we're looking into as a company. We are a construction company, and you know, the owner, he's always talking about that kind of stuff, you know. And I would like to get in contact with somebody that can help us with that if it's not too much trouble.
Where are you located?
We are located on Charleston, South Carolina.
Okay. So you have an SBDC North Charleston?
Yes.
And you have a SCORE chapter in Charleston as well. I can't speak whether or not the SCORE chapter will have a access to the benchmarking report, but I know the SBDC does. Let me see here. Let me give you the contact information. SBDC in North Charleston is 843-740-6160.
Thank you. Thank you very much. I appreciate it.
SCORE in Charleston is 800-634-0245.
Awesome. Thank you.
Sure.
SCORE. Okay. Thank you. Have a wonderful day, guys. Appreciate it.
You too.
Thank you, Annabelle. You as well. Earl, do you have a contact with USDA? And do you have any contacts that help with getting international products for sale to provide startup financing?
Yes. For the international, Beth Smith with the SBDC would be the best bet. So let me see here. Her number is 803-231-8204. And she does international trade consulting. And what was the other one? USDA?
USDA.
Here's is it an agriculture related business, or is this the one about the venue?
This, I believe, it's the same one about the venue.
Okay.
And can you give that? And while you're looking at that, can you give the international contact number again? Was that 803-831? Didn't catch the last four.
803-231-8204.
231-8204.
Yep. And then for the ag related venue, I'm going to give you an SBDC number of a gentleman who works with USDA with small businesses. And that would be the best one probably for you to start with. That's Jim Johnson. Phone number is 803-567-1921. His specialty is agribusinesses.
Okay. Thank you, sir. Anyone else have any questions? Okay, that that 803 number again was 803-231.
8204.
8204. Thank you, sir. Anyone have any other questions? I tell you, pick Earl's brain while you have him.
Hey,
Yeah.
yeah, hey Earl.
Hello.
Hey, so I just starting a business, trucking business. Um, and I just need some guidance on, the basic setup as far as getting funded and building business credit. That's where I'm at right now. Before I can walk into a bank and, ask for a loan and stuff like that. Just want to build a
Mhm.
good credit profile, I guess.
Okay. So that would be a good assignment again for SCORE or SBDC. We worked with a coach there. In many cases, it's SCORE, they may be able to actually link you up with somebody who's worked in that industry already. And
Okay.
they could kind of mentor you as you're developing the business, and then put together a business plan. So you've got your numbers in front of you. That's probably what I would suggest that you do first. And
Okay.
are you already doing the business, or you're just kind of
Yeah,
getting in together?
yeah, I'm just still getting it together. I haven't started yet. I'm just, I got the
Yeah.
LLC started, and I just, doing the groundwork.
Okay. Do you have experience in this, I assume?
No, not actually. New experience, I would say. I've
Hmm.
just started it. I've been working before. Well, as of right now, I'm still working for a company. I'm still working for a private company,
Hmm.
and so I just wanted to go off and do my own thing sooner or
Okay.
later.
Yeah, so before you start writing checks to people and making commitments, I would suggest definitely sitting down. I know when I worked SBDC, I bet I probably didn't go more than 2 weeks without seeing a transportation oriented business come through the door. So
Mhm.
most all of them will have some experience in what it takes to get one set up, and what the gotchas are that you need to know about before you get too far down the path. So
Right.
where are you located?
North Charleston, South Carolina.
Okay, so same numbers I just provided for um, the other young lady would apply to you. Did you happen to jot those down?
No, sir, I missed it.
Okay,
Um,
I can give them to you again if you're ready.
okay, I'm ready.
Yeah, phone number 843-740-6160. That's for SBDC in Charleston.
And that's S.
SBDC, Small Business Development Center.
Okay.
And then the
Oh,
SCORE office in Charleston is 800-634-0245.
634. That's score.
Yep,
All righty. Thank you for that information, Earl.
certainly.
Anyone else? Don't be shy. It's the time to get any clarification you may need on those balance sheets, the P&Ls, which are highly crucial to business. And as Earl pointed out, those same documents that banks will ask for. And even your small lenders will ask to see that. And there are some instances, depending on what your business is into, um, and what bid you are going after. Sometimes those statements are required in order to secure that bid as well.
Yep.
Anyone else? All right. Once again, be sure to get the answers that we answered, typed in the Q&A. And again, our system administrator, Ms. Thomas, will make sure that all attendees have access to the recording of today, and as well as Earl being so gracious with the slide deck. And I hope that everyone caught his direct information, because he will respond to you. And it's wonderful to have someone, I will say, not only knowledgeable, but I will say high up in the business world. It's nice to have that contact. So if you all need some networking power, right? You definitely want Earl on your side with that.
Definitely
Again,
connect the dots. Yep.
exactly. All right. Earl, thank you again so very much, and we look forward to our next session with you.
All right. We'll see you then.
Yes, indeed. You all have a wonderful day and a great rest of your week, and much success with your business endeavors.
All right. We'll see you. Thanks.
Yes, sir. Thank you.